Thank you everyone for joining us. I want to start by talking about Matt Skaruppa, who up until today has presided over 100% of our earnings calls as our CFO. It really has been one of the singular honors of my career to work with Matt. Matt, I know you're watching tonight, and thank you really for everything you did for our mission. Now, Matt is a hard act to follow, so I can't think of anybody better to take his place than the person who helped us hire him, our long-term board member and chair of our audit committee, Jillian Munson. She's our new CFO. She's here with us today, and I'm very much looking forward to working closely with her. Now, let's get to the business at hand. 2025 was another strong year for Duolingo. For the first time, we surpassed 50 million daily active users, and that's more than 5 times as many as we had when we IPO'd in 2021. We also delivered over $1 billion in bookings, and more than $300 million in adjusted EBITDA. I'm proud that we have built a business that is profitable at scale and that is having a huge positive impact in the world. But what excites me most is not what we've already achieved, it's what's ahead. I'm more convinced than ever that the accelerating advances in AI will fundamentally change the way people learn. This creates an enormous opportunity for us. We're the most popular education app in the world by a margin, and we intend to lead this shift. By leaning into this moment, we believe we can redefine the future of learning while generating exceptional value for our shareholders over the long term. So, huge opportunity ahead of us, and the most important thing right now is to continue attracting users. We said this in our last earnings call. Now, while our DAU growth over the past several years has been nothing short of phenomenal, it decelerated throughout 2025, and as the new year began, we continued seeing this trend. We now expect DAU growth to be about 20% year over year throughout 2026. This reinforced my conviction that we needed to take more decisive actions to re-accelerate DAU growth. Another way of seeing it is that long-term value in this business is driven by 2 things: the size of our active learner base, that's like the size of the pie, and how effectively we monetize that base. You can think of that as the piece of the pie that pays. At this moment, we are prioritizing growing the size of the pie. So, as I detailed in our shareholder letter, we have a carefully considered plan for 2026 that focuses on teaching better and user growth. In addition to the thousands of A/B tests we plan to run in 2026 to improve our product, we have larger initiatives that fall into 3 categories: teaching languages better, improving the free user experience, and feeding our next growth engines, meaning our subjects of math, music, and chess. All of this is in service of growing DAUs faster. Our medium-term goal is to reach 100 million daily active users in 2028. If we succeed in doubling our DAUs, the payoff would be significant. A more resilient brand, a business with meaningfully higher bookings and profit, and most importantly, a company that reaches and teaches far more people around the world. But in the short term implication is that this year we'll see slower bookings growth and lower profitability, as captured in our guide. I want you to know that I don't take this decision lightly, and that I know it may come as a surprise to some investors, but it's fundamentally aligned with what I said to shareholders in my very first letter, which I will now read. Dear potential investors, the main thing you need to know is that I plan to dedicate my life to building a future in which, through technology, every person on this planet has access to the best quality of education. And not only that, but a future in which people want to spend their time learning. Duolingo is the platform for building that future, and we are just getting started. And with that, I'll turn it over to Jillian Long-Term Munson.
Thank you, Luis, for the really warm welcome. Being a full-time member of this team is going to be a great adventure. I'd be remiss if I didn't say a huge thank you to my friend and colleague, Matt Skaruppa, who we are all going to miss and who I wish all the best. We had a solid finish to the year and ended in a strong financial position, a great platform from which to look forward strategically, as Luis explained. Turning to the go-forward plan and guidance, in our shareholder letter, we have included a lot of specific details to help you with your 2026 modeling, likely more than we will going forward. I'll repeat a bit here and add some color in areas we really want to be sure we emphasize. At the highest level, our 2026 guidance is bookings growth of 10 to 12%, revenue growth of 15 to 18%, and adjusted EBITDA margin around 25%. For our Q1 guidance, it is 11% bookings growth, 25% revenue growth, and an adjusted EBITDA margin of 25.5%. Here are some details that I hope will help you with your models. Looking at bookings. Quarter to date, as of last Friday, Q1 bookings growth was tracking above our Q1 guidance. However, it's important to remember that we are heading into a particularly tough compare in the first half with Dead Duo, a price increase, particularly strong advertising bookings, and the rollout of Energy. We are modeling some improvement to bookings growth rates at the end of the year, but have only factored in modest early returns on our investments at this point, which we think is prudent, as shifts like the ones we are making can take some time to materialize. Turning to revenue, we believe that the rate of year-over-year revenue growth will adjust down following bookings growth rates over the course of the year, with some stabilization in the second half. Given our Q1 guidance is 25% growth, the math implies that quarters 3 and 4 will be below the low end of this guidance range. As for costs, as you think about our COGS, the key thing to keep in mind is that we plan to share AI features with a far greater portion of our user base. This is anticipated in the lower gross margins that we outlined in our letter. Additionally, we are investing in 2026. As a result, we expect that R&D and sales and marketing spend growth will outpace revenue growth. Putting it all together, the trajectory of adjusted EBITDA margins will likely be slightly different in 2026 than in previous years. In Q1, we've guided to 25.5% adjusted EBITDA margin, and we expect adjusted EBITDA margin to decline roughly 3 points sequentially in Q2. Then it will improve through the back half of the year, with Q4 being our highest margin quarter in 2026. I'd note, however, that we do manage to annual targets, and the timing of our spending could shift, which we will update you on as we continue the year. That's a lot of detail, we know. We hope that in combination with the shareholder letter, this does help you manage your estimates as we execute our strategy. You may ask about our guidance philosophy, and so I thought I'd note that. This year, our view is that, like in Q4, our hope is to narrow the gap between our guidance and actuals versus what you have generally seen from Duolingo in the past. Finally, I would like to highlight our buyback authorization that was announced today. Our board has authorized a buyback of up to $400 million in our shares. We believe this represents good capital allocation discipline and expect to execute upon this authorization in the coming year. I couldn't be more excited to have joined this company at this time. The size and scale of the market opportunity ahead is massive, and I very much view 2026 as a foundational year to achieve that opportunity. Thank you, Luis. I'm excited to step into this role during this important moment at the company. And now I'll turn it back to the operator, and we can take your questions.
We will now move to our question and answer session. At this time, if you would like to ask a question, please click on the raise hand button, which can be found on the black bar at the bottom of your screen. You may remove yourself from the queue at any time by lowering your hand. When it is your turn, you'll receive a message on your screen asking to be promoted to panelist. Please accept, wait a moment, and once you've been promoted, you'll hear your name called and you may unmute your video and audio and ask your question. Your Zoom application may disappear momentarily. This is expected and your window will reappear. We are allowing analysts one relevant follow-up question to their main question today. We will now pause a moment to allow the team to gather the questions and assemble the queue. We'll take our first question from Brian Smellick with JP Morgan. Brian is just connecting now, so it might just take a moment. Brian, please turn on your video and unmute your line and ask your question.
Great. Thanks for taking the questions today. Luis, to start, can you just elaborate a bit more on, what you're seeing in the market across AI, and just overall innovation across the technology space that makes this the right time for the strategic shift to reaccelerate user growth? And I guess more fundamentally to achieve your 2028 target to double users, what are the, call it 1 to 2 top priorities across the product that will really enhance that DAU growth and drive the implied acceleration to get there? Thank you.
Thank you, Brian. Thank you for the question. Okay, in terms of AI, look, we really are in a unique time in history. AI is going to allow us to teach significantly better. And I also believe that the way people learn is just going to change. And the reason for that is I think that in the next few years, we are going to see quality of teaching that is as good as a one-on-one tutor. We're going to see that. But not only that, not only is it as good as a one-on-one tutor, but it'll be as fun as a mobile game. So it's this incredible thing that's going to happen. And you know, the things that we're seeing is we're able to find where users or learners are having trouble and really specialize in that, and you know, answer all their questions, and you know, whenever they have any kind of confusion, we can get in there and really fix it. We also, in the case of teaching languages, we can finally practice conversation better. You know, we have this feature, video call with Lily. It keeps getting better and better at being able to practice your conversation. And so we can see improvements in how well people are learning. And the same is true for all our other subjects, certainly with math. You know, like I said in our shareholder letter, I believe that this year we're going to have the best tutor app for math. This is going to be Duolingo Math. You know, it'll just, I think this is a huge market potential. There's about 1 billion people learning math in the world. So we'll be able to teach them, you know, as many as we can really well. So I'm very excited about AI in general. And this is why I think now is the time to try to attract as many users as possible. Now, in terms of what are the, you know, the top priorities that will allow us to get to, you know, 100 million daily active users by 2028, you know, it's a number of things. In general, the 3 buckets that we're going to be investing in are teaching languages better. Languages is our largest subject, and it'll continue being our largest subject for a while. We're going to teach languages significantly better, and there's a lot of work there. Another one is in making the free user experience better. The less friction that there is in the free user experience, the more users we have. We have seen this over the last 15 years. Whenever we remove friction from the free user experience, DAUs grow. Like, so that is another one. And then the third thing that we're going to be doing is just investing a lot in our new growth engines. That's our new subjects. So in particular, chess has grown quite a bit. As I said in our shareholder letter, we have about 7 million daily active users in chess, and this is less than a year after we launched. At this point, we believe we're the 2nd largest chess thing in the world, and which is, by the way, incredible, because if you search for chess on the App Store, we don't appear in the results. We just haven't even gotten there to you know, doing App Store optimization, but we already got the 7 million daily active users. So those are the things that I think are going to help us get there.
Great, thanks. And then I guess, you know, elaborating a bit more, you mentioned video call as well, too. Can you talk about the philosophy and the product roadmap really across Max versus Super? And you know, you've been very transparent in the past in terms of, you know, oscillating the features and the relative pricing set. So how should we think about just overall the Max roadmap as you start to shift those video calls to Super users as well?
Yeah, when we started Max a few years ago, you know, we introduced some AI features. We were super excited about all the AI features because they really can help us teach better. At the time, cost for AI inference was way higher than it is now. And so we decided to put our AI features in, you know, behind a much higher subscription tier, which is Duolingo Max. That's what we have done. But we said back then that as AI costs came down, we would experiment putting features in the different tiers, because ultimately our goal is to be able to teach as many people as possible. At this point, the cost of a video call has gone down very significantly over the last, you know, couple of years since we launched video call, and we feel pretty comfortable being able to put it inside Super Duolingo. Now, like everything we do, this is going to be an A/B test. We're going to A/B test what happens if we put some video call in Super Duolingo. I'm not sure what that A/B test will do. It may be that this increases revenue because more people sign up to Super Duolingo, or because the retention of Super Duolingo is significantly higher because video call is there. Or it may be that it decreases bookings because we're not making as much money from selling Max. I don't know what it'll do, but whatever it does, we're going to take the appropriate action. So for example, if the decrease in bookings is too high, we may do something like we meter video calls. So for example, on Super Duolingo, you only get access to 1 video call a day, versus on Max, you get unlimited. Now, I'm saying all of this very much in advance because I don't actually know what will win in these A/B tests. But what I will tell you is that for sure, we will put some form of video call in our Super tier, because we just think that it'll help us teach a lot better to a significantly larger number of people. There's about 10 times as many subscribers on Super than they are on Max. So if we put video call on Super, 10 times as many people have access to conversational practice. And the other thing that I think is we're going to do this on our own terms. I mean, my sense is that over time, it will not make sense to have a feature like video call on their plan that is so expensive as Max. So, we're doing it from a position of strength right now where our finances are very strong, and we're going to just do that as opposed to, if we had to do it defensively 3 years from now because a competitor popped up. I mean, at the moment, we really are not worried about competition, so we're getting ahead of it.
Yeah, and Brian, we designed the guidance to give the company the room to go do all of this and experiment with this and do the right thing for our customers. And that's precisely how the guidance and the way we're thinking about the financials this year are designed.
Great. Thank you both.
Our next question comes from Ralph Schackart with William Blair. Please unmute your line, turn on your video, and ask your question.
Good evening, Luis and Jillian. Thanks for taking the question. How's it going? Luis, last call, when you talked about the reprioritization for 2026, and I think, it was sort of contemplated it was going to have some impact on the financials for 2026, but maybe not to the level guided that was presented today. At least that was my interpretation. I could certainly have that wrong. But I guess, did something change since last quarter in terms of how you thought about 2026 or the user growth? Is this larger than perhaps you originally anticipated? And then maybe a question for Jillian on the 20% DAU growth. When these friction points or monetization friction points are removed, should we expect some reacceleration in the DAU metrics? And I guess you sort of suggested that you're tracking above in bookings. Maybe just some kind of early reads on, as you're removing some of these friction points, how the user growth is responding. Thank you.
Thank you, Ralph, for your question. So yes, in the last call, as you said, we said that we would be concentrating on user growth. And for similar reasons as now. One, we had seen deceleration of DAU growth throughout 2025, some deceleration of user growth. And in addition to that, we think this is just a unique opportunity where instead of decelerating user growth, we should be accelerating user growth because we should, it's just capture this opportunity. So that was what we said in the last earnings call. What happened between then and now are two things. The first is that we kept on seeing this trend of user deceleration, and by now we expect about 20% year-over-year DAU growth throughout 2026. And that, and the other thing is that my conviction of AI just increased even more, and that just made it so that I have even more conviction that we need to spend, really the vast majority of our efforts on DAU growth. And as we, built the plan for 2026, this is what came out. The guidance that we're giving. And, in terms of the 20%, I guess, Jillian, you can go ahead and answer.
Yeah. So as Luis said, we really do expect that 20% through the year. In terms of the Q1, what we're seeing so far, it is tracking ahead of the guidance. And we think that shows everyone that there is a lot of health in the business, but you do have some really, really tough comps coming. And so the overall guide reflects that. A thing I think it's really important to put in context that Luis is talking about is the confidence we've gotten in going for the bigger prize. And so when you think about that 20% and the 100 million target, that would imply an acceleration to much higher growth rates in the next couple of years. And if you kind of play that out in terms of what the financials could look at, that is just, as Luis said, a much bigger business. So as we look at the business, we think to ourselves, okay, we could have grown the business. Probably we would be at about a mid-teens CAGR over the next couple of years. If we could keep our margins where they are, we're probably looking at $1.5 billion business, $400+ million in adjusted EBITDA. But we at the company are really motivated to go for the bigger prize, which is much more aligned with what Luis and Severin were thinking about when they founded the company. So then if you sort of play out the DAU, these is all back of the envelope. But if we can get to that DAU and even reasonable monetization assumptions from where we are today, and we believe we can scale our expenses over time, you're looking at a business in a couple of years that could be $2.5 billion with over $700 million in adjusted EBITDA. And I think around this entire company, we're really motivated to go for the bigger prize. And so that's what you're seeing in kind of how we're thinking about it. In terms of when you're going to see it in the model, we've really modeled it late in the year. So it's going to take a little while. What we're working on is going to take a little while to see through it, but we do have a little bit in the end of the year. We think it's prudent to keep that small for now until we kind of get going. You'll start to see more and more as we move into 27 and 28.
Great. Thanks, Lisa. Thanks, Jillian.
The next question comes from Mark Mahoney with Evercore. Please turn on your video, unmute your line, and ask your question.
Okay, great. I want to ask a growth question and a product question. The growth question is, you mentioned these factors that cause this deceleration, law of large numbers, increased maybe focus on monetization. There are two other potential reasons too. So just address those, which is market saturation and competitive intensity. Maybe there's, are there new data points that just remind you or open your eyes even more to the long-term growth opportunity here? And then in the products, the video calls is a wonderful product. These other things that you're talking about, the speaking adventures, is that on the come? Like, how soon should we expect that? And getting to this more advanced content with all of your 9 largest languages up to that 129 score, is that something that happens now, or is that something that's a multi-year build? Like, how long does it take to get to those 2 products, that we could potentially see the products and then the impact that they would have? Thank you.
Thank you, Mark. Okay, so your first question is about market saturation and competition. We're worried about neither one of those. In terms of competition, if you look at language learning apps, we have about 85% of the daily active users of language learning apps in the world. And that number has remained, pretty flat over a while. Basically, we're just not particularly concerned about that. In terms of market saturation, for example, we look at things like the percentage of daily active users in a given country compared to the size of the internet base of that country. So for example, in the United States, 2% of all internet users on a given day use Duolingo. So 2% penetration in the US for daily users. In the UK, that's 3%. In Germany, that's 4%. And Germany is not the highest country we have. We actually think we can get much higher than that. But even if we only assume that every country got to 2%, which is the US penetration, we would more than double our daily active users. So I just don't think we're near saturation at all. And in general, we're not seeing anything different. For example, we survey our churned users, and the answers to the surveys of our churned users haven't really changed in years. And the most common answer, by the way, when people stop using Duolingo about where they go, is that they stop learning, and that has been true for a while. So that's just not something we're particularly concerned about. In terms of the features, we mentioned in the shareholder letter, we mentioned speaking adventures. We're very excited about that. What that feature is like is basically it's a little game where you have to do something. For example, you may be told, go buy a sandwich and give it to that person and then ask them for money or something, like something that you have to do. So in that, you do a lot of things with just text, but every now and then in there you have to speak to get the things what you want. That's going to come out. That's going to be for all users, free and paid. That's going to be scaled. I mean, we're already testing it. That's going to be scaled sometime mid-year. So you probably see it in your app sometime between now and the middle of the year. We're very excited about that. In terms of more advanced content, that's happening relatively soon. In a matter of a month or two, you will see significantly more advanced content. So basically, all of our courses that teach the top 9 languages that we teach, which by the way cover more than 90% of our daily active users, will have content up to Duolingo score 129, which is a particularly important score because that's the score that you need in order to get a knowledge job in that language. So we're very excited about that, and that's coming now. Importantly to say, that content is going to go out there, and we're very happy about that. But that's just the beginning. As soon as it goes out there, we can start improving this content the same way we improve everything. And so over the remainder of the year, you're just going to see better and better versions of this more advanced content. And we're pretty excited about that.
Okay. Thank you, Luis.
Sure. Thank you, Mark.
We'll take our next question from Justin Patterson with KeyBank. Please unmute your video and audio and ask your question.
Great. Thank you very much. Luis, I was hoping you could talk a little bit more about just the social strategy. We haven't really seen the same degree of virality through the through TikTok that you used to be getting. So would love to hear about how you're refining that and thinking of that as just a vector to grow daily usage. And then with respect to video call, I know you've made a lot of improvements within there designed to increase more words being spoken, to make it easier to use. So I'd love to hear about just how that's been going versus expectations and how you think moving this into the super tier can really drive more engagement and eventually help contribute to that bookings reacceleration. Thank you.
Yeah, thank you, Justin. In terms of our social marketing strategy, I mean, we have an excellent marketing team. Really, I think best in the business. Our videos are going viral and they're getting millions of views. But I have to say the comparison point, particularly a year ago. A year ago, there were many weeks where we had the single most watched video in all of TikTok. That's incredible. So while we're still seeing virality in our videos, we're not in a position where it's the most watched video in all of TikTok. There's a number of reasons for that. One of them is just algorithms have changed enough that it's harder to do that, consistently. So that, I mean, that's one reason. And in general, we're going to continue with the strategy of really trying to get as much virality as possible. And that will. I'm pretty happy with the results so far. But you are right that compared to a year ago, it's not quite the same. In terms of video call improvements, I'm very happy with the results for video call improvements. Basically, if you look at the graph of words spoken per user on video call, that is just a monotonically increasing graph over time. It just keeps getting better and better and better. And basically, we're just a lot better at getting Lily that you're talking to elicit more conversation. Right now we're trying a new thing where we're actually starting to tell you, hey, in your next response, ask a question, or in your next response, use the word because or something, and that actually really gets people going more and more. So I'm very happy with all these improvements, and I really do think that giving it to more users, what that'll do is it'll basically get more users to be promoters of Duolingo, because we see that people that engage with video call post online and say things like, my God, I was skeptical that I could learn a language on Duolingo, but I've just been using Duolingo and using video call, and somehow, out of the blue, I am now able to have a conversation. So we're very happy with that.
Thank you.
Our next question comes from Andrew Boone with Citizens JMP. Please unmute your video and audio and ask your question.
Thanks so much for taking the question. I wanted to go back to the free user experience and improving it. And really the question is, how does that evolve into a monetization strategy over time, right? So it sounds like one of the lessons was that you guys essentially over-monetized your user base. So Luis, as we think about going through this transition, what happens on the other side in terms of the lesson that you guys now have as you guys come back and then start to monetize users later on?
Andrew, this is an excellent question. Look, we got ourselves into an interesting situation where both Duolingo is under-monetized and over-monetized at the same time. It's under-monetized in that, look, only about 10% of our monthly active users pay us. We wholeheartedly believe we can do much better than that. If you look at comps, if you look at things like Spotify, for example, it's like half of their users are paying them, give or take. And in a lot of these freemium businesses, we really think we can get much higher than 10%. However, the way we were, increasing monetization was, we found that the quickest way to increase monetization was basically by adding friction. The more we added friction, the more we got people to subscribe. And that, that's okay. But I think that we got it to a point where it really became at odds with DAU growth. There are other ways to get people to subscribe. For example, you can add more features, or you can have features that are, not exactly a friction, but things like selling customizations for avatars and things like that have worked really well for games, and we are kind of half a game. So what we're doing now is for the next year, we're using this year to also find ways to monetize that get more people to subscribe. That is true, but that may not be doing so by adding friction. And we're really confident that we can do that. It's just slower because monetizing by adding friction, like if you told me next week I needed to make whatever $50,000 more a day, it was actually quite easy to do. You just double the ad load or whatever it was. But these other ways of monetizing are just going to take a little longer to do. But we're very confident that we're gonna have some, because only 10% of our active users pay us to subscribe.
And then I wanted to ask about the chess disclosure. And this is really about utilizing multiple apps at the same time. And so if I think about the 7 million users and I think about the core trend of core Duolingo through 2025, how do I think about multiple users using multiple apps, right? Do I just take the 53 million and I subtract 7 to be able to think about where you are? Or what's the right way to think about that? Thank you so much.
Another great question. So we said chess has gotten up to about 7 million daily active users in less than a year. We're very proud of that. It's an incredible growth. Now, the majority of these users, whenever we put a new subject out on Duolingo, it is a lot easier to get to our own users rather than to get to users outside of Duolingo, because we have a direct line of communication to our own users. So the majority of these users, we're not basically saying the exact number, but the majority of those users are users that were Duolingo users and now are using both languages and chess. That's basically what the common thing that's happening. We're the way to see it is not that languages have not been growing. In fact, languages are growing at about the same pace as Duolingo, because it's the largest course. It's just that we are getting some new users for chess, but a lot of them are just doubling up from languages and chess. And what we are seeing is that over time, more and more people are finding out that Duolingo has chess. And then chess is starting to attract its own user base. And I think that's what's going to happen over time. That just takes a little bit of time to do that. But that's what's happening.
Great, thank you.
Thank you.
Our next question comes from Alexander Sklar with Raymond James. Please unmute your video and audio and ask your question.
Great, thank you. Luis or Jillian, I don't know who wants to take this one, but on the bookings outlook, just given some of the unknowns you spoke to with Brian's question earlier on how video call tests are going to play out on Super, what is the bookings outlook factor in terms of conversion rate of Super relative to what you've experienced in the past? And how much time or data, Luis, do you think you need to know if the decision's a successful one based on some of the historical testing?
So if you look at the bookings, the main thing to think about right now is if you start from Q4 bookings growth of about 24%, and then look over to the guide, we think about half of that is the user deceleration continuation that Luis talked about. And then the other half of that is us monetizing more carefully and thinking about, taking away some friction for our users. So that's how we're thinking about positioning that. In terms of exactly how all the monetization is going to play out, as you know, we A/B test like crazy around here. And so there's a lot to be learned, as Luis explained, over the course of this year. What we're really trying to do with the guidance is give ourselves the room from a position of really good financial strength to go do that work, because we think it gives us the opportunity to reach for the higher prize.
Yeah, and in terms of how long it'll take until we know this is working, it's going to take a little while. I mean, we need to make a lot of product changes, et cetera, each of which take a while. And then we also need to see user reactions, et cetera. So it's going to take a little while. As Jillian said, we're putting in something modest towards the end of the year to see that some things are working there.
Okay, and then maybe just a quick follow-up. Anything factored in terms of pricing changes within the different packages in the outlook?
I mean, what we're going to do this year is we're going to be experimenting like pretty much every year, although probably more so with prices quite a bit. That means higher prices, lower prices. We're always A/B testing, so we're going to be doing that. But this is not something that we're really putting in. We're putting in the results of all the combined experiments in the outlook. But I don't know if I can tell you for a fact that the price of Super will be higher because we have video call or not. I don't know the results of the A/B tests.
All right. Thank you both.
Yeah, thank you.
Our next question comes from Wyatt Swanson with D.A. Davidson. Please unmute your video and audio and ask your question.
Hey guys, thanks for the question. I've just got one, thinking about like the medium-term goal of reaching the 100 million DAUs. Does that assume like marketing stays elevated and monetization stays on the back burner for the entire duration? I think you've kind of answered it, but I'm just sort of thinking through as you've sort of ramped monetization over the past year, and you've started seeing DAUs start to decel. So like, how do you think about that balance over the medium term? Should we see monetization slowly start to ramp up in these alternate forms that, you're kind of exploring?
Yeah, I mean, I can answer, and I can also let Jillian have at it. But in general, our marketing is still extremely efficient. I mean, it's really still a small fraction of our revenue that we spend in marketing. I assume that every year the total number of marketing dollars that we spend will continue going up. However, I'm hoping that past this year we are going to get some efficiencies. It's hard to say exactly what will happen past this year. It's not like we're guiding, but I assume that we're going to get some efficiencies past this year. And then in terms of monetization, like Jillian was saying before, just almost any way you look at it, with 100 million daily active users, this is just a much larger business. I do believe, again, hard to put in numbers exactly, to give you a model or anything for past 2026, but I do believe that you're going to see other things really start ramping up. I'm very excited about direct ad sales. We're seeing just good uptake on that. And I'm also very excited about in-app purchases, in particular with our avatars. There's a lot of love for our avatars and for our playful brand, and we think we can do quite a bit there.
Yeah, and as you think about the margins of the business, one of the reasons I'm so excited about where we're at is that we've shown that this business can have tremendous scale, even at the size we're at today. And we think we can be a lot bigger. And there's nothing that we can see in the business that says we can't scale it going forward. We're making an investment right now and descaling some to make that happen. But really, we don't think we need to hire double the number of people, twice the amount of marketing. We think that this business can scale really beautifully. It's one of the nicest things about the business model, that we have the opportunity to do what we're doing from a position of strength, profitability. We will continue to generate tremendous EBITDA and free cash flow, even as we invest. And we see no reason why we couldn't scale up as we re-enter monetization in a bit more of a smarter way from here.
Got it. That's fair. And could you maybe answer as to like what the ads business will look like going forward? You've talked about like doubling the ad load is maybe causing additional friction and users potentially turning off. So like, are ads, it almost made it sound like ads were almost coming off of the platform and it wasn't going to be like as big of a monetization channel.
What we're unlikely to do is increase ad load. At the moment, you see an ad at the end of a lesson. That is unlikely to go up. Certainly not this year, because that really goes counter to everything that I'm saying. However, we are doing a lot better of a job at displaying better ads. I mean, historically, we just have not spent a lot of effort on ads historically. So, for example, we use just these network ads that are kind of the lowest common denominator network ads. We are now doing direct deals. What that does is it does two things for our business. Number one, it significantly increases the quality of the ad. So rather than getting ads for like games that you've never heard of, you're gonna get ads from like Disney or something, significantly higher quality ads. And then the amount of money we make per ad is significantly higher when we do that. So I think that's kind of how it's going to be. We're experimenting with some stuff that is really cool, but I don't know if we'll make it work. I'll tell you, my dream has always been to be able to give you ads in the language that you're learning. And we are trying that. So if you're learning Spanish, part of the ad's going to be in Spanish. What I love about that is that the users want that. And that's also good in the end for the advertiser, because the user is actually paying a lot of attention. So I'm hoping we'll be able to try that. I don't know which of these things will work. But in general, I just think ad load will not be higher, but we'll make a lot more money per ad.
Got it. Thank you, guys.
Yeah.
Our next question comes from Nathan Feather with Morgan Stanley. Please unmute your line and ask your question.
Hey, good evening, everyone. Two on my end. First, there's been a lot of concern in the market about the improvement in AI translation tools and the general rise of all-purpose chatbots. I guess, what gives you conviction that the user deceleration we saw in 2025 was not due to those factors? And then second, just of the changes you've made so far to improve the user experience, are you seeing anything in the data that gives you conviction that these changes are going to stabilize user growth through the year? And are you already seeing that, or when might you expect to reach that stabilization point?
Okay. Thank you for the question. So AI translation isn't, people talk about it, but it is not something that we are worried internally about. AI translation has been essentially perfect among the large languages for like more than 10 years. I mean, between Spanish and English, it's essentially been perfect. Our users use Duolingo for two main reasons. One, as a hobby, they actually want to learn. And those people, whether there's AI translation or it doesn't matter, it's a hobby for them. And then the other group of people is learning English. They want to learn English, and they actually want to learn English. We know also that, we ask users why they leave Duolingo. We have these churned user surveys. This does not come up. I mean, like I said, the main reason that people leave Duolingo is because they got busy. We know what that means. It just means they are doing more social media. Like that's basically what that means. So we're just not. That's not something we're particularly concerned about. In terms of data about, are we seeing any data that is making us believe that user growth is accelerating, etc. So far, we have done a few things to make the app, the free experience better. For example, we gave a feature that was in Duolingo Max called Explain My Answer. It's now free for everybody. So we've done stuff like that, and we are seeing quite a bit of uptake on the features, and we're seeing that users love it. But we have not yet seen an acceleration in DAUs that we think is like, oh my God, we're done. Now, to be fair, we did not expect this. I think this is why we're saying that you should expect seeing some modest results towards the end of the year.
Great, thank you.
Yeah.
Our next question comes from Ryan McDonald with Needham. Please unmute your video and audio and ask your question.
Hello, Luis.
Hi,
John,
Ryan.
nice to meet you. Welcome. Luis, I wanted to ask about sort of Duolingo Max to start. Fourth quarter, I think, was your first sort of large cohort or lapping the first large cohort of Max subscribers, and was curious what you were seeing from a retention and renewal perspective and how much that's guiding sort of the strategy to bring video call back into Super. And then if when this sort of transition happens, Jillian, when should we start to see, I guess, the impact of subscribers moving from Max down to Super with video call being the feature, and what assumptions are you making for that in the guidance?
Yeah, in terms of Max, none of the Max numbers are making us do anything with video call. The Max numbers are actually quite good. We're happy with the Max numbers. We are taking, what I call an offensive move with Max. I just believe that the cost of video call has gone down enough that it just kind of doesn't make sense for us to just have it in Max when we can offer it in much cheaper packages. We're not quite there where we can offer it for free, but at some point we may be able to, and I want to offer it for free because I actually think that it is in our best interest to have the largest possible user base that we can figure out how to monetize in any way, rather than just keeping this for a tiny little bit of the user base. So that's just our philosophy. So the entire decision for trying to put video call in Super comes more from, we think that this is the right thing for our users, rather than any numbers with Max. We're pretty happy with the numbers with Max, actually. And then Jillian, I don't know if you wanted to answer that second part. We cannot hear you. You're muted, or I cannot hear you. Uh-oh. Well, sorry, your question, I kind of forgot what your question was because I was like, oh, that's for Jillian. I forget it. What was your question? I can try to answer that.
Yeah, as you think about the guidance for fiscal 26, I guess what assumptions, if any, are you making, sort of building in for when video call rolls out to Super, for sort of, I guess you could call it sort of ARPU trend changes of maybe downsells from Max down to Super from that?
Yeah, you know what? I'll tell you probably what I know what Jillian would have said in here. Look, we ourselves don't really know exactly what is going to happen with this A/B test where we start giving video call to Super. We don't know that ourselves, but we're going to A/B test it. Everything we put in our guidance, some bounds, what we think that will actually, this is what we think in all, and there are some bounds. We'll stay within those bounds, and we have different ways of staying within those bounds. So, for example, if if we see that putting video call in super really, destroys our max business or something, where it's like really terrible, then we'll start doing something like metering video call in super, like you only get access to 1 per day versus in max unlimited, something like that. Again, I'm talking about things in the future because so I just don't know exactly what's going to happen, but we're going to stay within the bounds of what we have in the guide.
Okay.
I don't know, Jillian, if we can hear you now or not. No, unfortunately.
Not quite. Okay. Maybe, Luis, just one more quick one for you. You talked about sort of math and thinking that that's an opportunity to build and sort of have one of the best math tutoring apps in the world. As that gets developed, would you look at sort of new channels in terms of how to sort of distribute that? Like I think in the past, Duolingo for schools, as a way to sort of open up that population on the language side. Is that a potential viable channel as you think about areas where you could get this DAU growth from something like math?
Yeah, math is an interesting subject, and on the one side, I don't know of another subject other than languages that has as much of a market. I mean, math. There's 1 billion people learning math, so that's awesome. Now they're different than languages in the sense that these 1 billion people generally don't want to learn math, whereas the language people actually want to do that. And these 1 billion people are mostly in schools. In fact, they're mostly in K through 12 schools. That's where they are. So that is definitely where we're going to get to now. There's multiple ways to imagine how to do that. Our first step is to just make this product. We're almost there. I mean, if you look at the internal versions of our math course, they are incredibly good. Once that happens, there's a big question about go-to-market. At the moment, our hypothesis is that the easier way to get started, that may not be the ultimate thing that we do, but the easier way to get started is to think of it as a supplemental thing for schools. So rather than, get deals with school districts and stuff like that, think of it more as a competitor to Kumon.
Yeah.
That is, we believe, the better way to get started. Because there's a very large number of people that do have some sort of help outside, etc. By the way, what we like about this, and this is not, you're not going to see this year, but what we like about this over the long term is that the propensity to pay, not from the kids but from the parents, for math is very high. So we'll probably be able to do something there.
Awesome. Appreciate the color. Thanks, Luis.
Can you hear me now, Luis?
Yes.
Okay, good.
Jillian's back. I'm
Okay.
glad. Otherwise, they would have started asking questions about acronyms that I don't know, and we're in trouble.
Some nice people just snuck around my computer. We're better now. Thank you, guys.
We'll take our next question from Shweta Kajuria with Wolf Research. Please turn on your video and ask your question.
Hello.
Hi, Shweta.
Hi, Luis. Thank you for taking my questions. I was going to ask Jillian very specific 3 questions while she was muted, just to test her mic. No, actually, I have 2 questions. One is on retention and the other is on AI. So on retention rates, as we think about you investing in math and music and chess, and perhaps there are some cross-platform benefits, how do we think about churn and/or retention rates over time as you invest in the product? My understanding is that it has remained largely stable, but is there a reason to think that it actually improves markedly, and what that can do to your platform? And then the second is on AI. So you addressed this in terms of competition, where you have a market lead versus anyone else in the market right now. But what AI could potentially do is accelerate the path to creating new competitors that don't even exist today. So could you talk to potential risk of a competitor emerging because AI is making it easier to create certain products?
Yeah, sure. In terms of retention, I'll let Jillian say more stuff, but generally our retention, especially for payer retention, is pretty stable. It's very healthy and very stable. There's some chance it may go up. I don't think we're modeling that. I'll let Jillian know because I don't actually know if we're modeling that or not. But there's some chance it may go up over time, is because one thing we do know is that multi-subject users have higher retention, and the other thing that is true is that over time, more and more users are learning multiple subjects just because we offer more subjects. So there's some chance that it may go up. But I don't think, so far, you shouldn't really believe me on this because it has remained pretty flat.
Okay.
I don't know, Jillian, if you want to add to
Yeah.
that, then I can go to the new competitors on AI.
I mean, retention, it looks pretty flat over a fairly long period of time. And we look at it in aggregate, and we look at it via cohorts. I think the perspective we have is that it can stay where it is. That said, I think you're pointing out something really, really important. All the work we're doing to make the product great, so that word of mouth and top of the funnel and all that stuff keeps keeping the size of the pool bigger. That also helps current customers too, right? They get those features too. So I think it's a possibility, but we haven't modeled anything significant on that front on.
Okay.
Yeah, and in terms of your question about can a new competitor show up because AI allows the building of something faster? So it is true that with AI you can build stuff faster. And I assume that that'll be more true over time. That is an assumption that we have. The good news is that also applies to us. So we can also build stuff faster. So that is good. The other thing to say is, there's a little bit of a misunderstanding, I think, in the market about how easy it is to recreate a very sophisticated app like Duolingo. The reality is that if I were to write down just the spec of Duolingo, and I'm not talking about recreating it as in a programming language, like write it down in English, it would take me years. Because there are a million corner cases of things that we do that we're really smart about how, what we do for the user to get them to be more engaged or teach better, etc. So I'm not particularly worried about somebody just magically pressing a button and an app appearing that that is just better than Duolingo. On top of that, it's pretty hard. The reason Duolingo so far has not really gotten competition and at a large scale. Again, we have like 85% of the daily active users of language learning apps in the world, is because it's pretty hard to compete with our free product in the sense that we have really huge distribution. And a new entrant, when they come in, they need to figure out how to grow. What they usually do is they try performance marketing to try to grow fast. But because our free product is so good, they usually cannot make their performance marketing work if they are to have a free product. So what then they do is they put a paywall on it, and then that just really caps them. So it's just been really hard for entrants. I mean, look, the reality is that over the span of Duolingo, we have probably seen, I don't know, 400 apps come up and try to compete with us. And I'm making that number up, it's hundreds. And we just don't see them grow, again, because we have a very large distribution.
Okay, that's helpful. Thanks, Luis. Thanks, Jillian.
Thank you.
We'll take our next question from Eric Sheridan with Goldman Sachs. Please unmute your line and ask your question.
Eric, hello.
Hi, everyone. Thanks so much for taking the questions. Maybe building on Shweta's question and asking it a little bit differently. When you think about the AI landscape, what is the scope by which you think you need to sort of be a leader in AI learning in the four walls of your application and your experience, as opposed to possibly cooperating with LLM agents and being an application layer to their platform if more consumer behavior goes in that direction from an aggregation standpoint? I'd love to get your sort of philosophical view on that. And maybe the second question would be, you guys were probably one of the leading examples of a mobile-first company with Web 2.0. How should we think about the duration and the need to invest to reposition the company to be AI native in its tech stack over the next couple of years? Thanks so much.
Yeah. So good question about, does it make sense for us to continue in our own app versus something like an LLM? I'll tell you what we do. Just historically, there have been a number of new platforms that have happened since we launched Duolingo. For example, smart watches came out. Also, smart speakers came out, like Alexa. In all cases, we had a lot of people asking us questions, and certainly the companies that were building these things telling us, this is the next big thing. Everybody's going to be in their watch. You should be in the watch. In the past, we made the mistake of early on making an app for the watch or whatever, and only to realize later that apps for watches are not really a thing other than exercise apps for watches. So the way we see it is if it is the case that consumer behavior changes quite a bit so that nobody has their own app and then everybody's over there, we will definitely do something about it, obviously. What I'll say, though, is that our app in particular, I mean, there are many other apps, etc., but you can think of our app a lot like a game. I mean, it really matters that we are not text-based. It just turns out that people really, really like doing things like playing Candy Crush or doing Duolingo, in part because of the animations, etc. So if you're just asking, are we going to be a thing in a chatbot? I just don't think you can get the engagement that we can get inside like a text-based chatbot. Now, again, I just don't know what the future is going to look like. But this is, at the moment, we feel pretty confident that the right investments are to continue making a beautiful experience that is very visual, because that's just what keeps people engaged. Yeah, and in terms of AI native, I mean, ultimately we're a technology company. We've been really trying to adopt AI and technology as fast as possible. In fact, we've probably gotten in trouble for adopting AI fast, for example, by writing stupid memos that I wrote one time. So I think you're gonna see us always take the next step with things like AI.
This concludes the Q&A section of the call. I would now like to turn the call back to the host for closing remarks.
Well, thank you, everyone. These were excellent questions. And I just want to say that, we're very excited about 2026. It is probably not exactly what investors expected. But if you are thinking about Duolingo as a long-term company, which obviously I am because that's kind of what I want, this is really the right investment to do. The second thing that I'll say is that Jillian started her job 3.5 days ago. So it is incredible the amount of knowledge that she has about our finances, which already surpasses mine. So thank you, Jillian, for that. And thank you, everyone.
I am so delighted to be here. Thank you, everyone.
Bye.
Okay, so that was super fun. I enjoyed watching that with you all and summarizing in the comments in live chat. If you haven't looked at that, take a look. I made a video before this when the news of the earnings report came out earlier at 4 p.m. And I was talking about how if you're a long-term investor, you want to take advantage of moments like this, because if you bought at $100 per share or $150 per share, then you want to buy. It only makes sense to buy at 90. And I can show you exactly why. Because if we look at the numbers, which I've looked at, I'm not sure where my mic is. Is it on my computer or right here? So I'm just holding them both up. But if we look at the numbers from Duolingo in the report, give me a second, let me just share the screen here. We can see, yeah, you can see that. Great. So we can see that the company is just performing. They're performing so well. So I was looking at this earlier. Their daily active users up 30% year over year. Their paid subscribers up 28% year over year. Their revenues up 39% year over year. Their total bookings 33% year over year. That includes everything, right? Including ads. And so just leave it up 29.5%. Net cash from operations, $387 million, and free cash flow of $360. So this company is performing incredibly well, and the stock is crashing. Why? Because they said they're going to focus on growing users. And if you've been watching with all of these hyperscalers, Google, Facebook, Amazon, right? Netflix, the reason that they're so powerful is that they have so many users. They are the duopolies in their markets. So when it comes to releasing new features, releasing new products, they can so easily just turn that into profits, into revenues, because there are just such a great mass of people that they can just sell to, because they have so many users already. They can just upsell them, right? So when you go on Netflix and there's a new show that you want to watch, because they make great shows, great limited series, movies, they can just lock that up and say, hey, you've been watching at that tier, but if you want to watch this tier, you want to watch this show, you gotta upgrade, right? So now they can just upsell you. They don't have to market to you. They don't have to send out mailers or advertise on Facebook and Twitter and Google because you're already here. They just say, hey, we have this new thing to their hundreds of millions of users. And now, even if 1% of those people get upsold and buy, they're making billions of dollars. Apple, they can just launch a new product like music or what notes or design systems, right? Design apps like they're doing now, the creative studio that they're releasing now. And that becomes $1 billion company, $1 billion business, $100 billion business overnight because they have so many people already in their ecosystem. So give me a second. So Duolingo is taking the same playbook. They're saying, hey, we've been doing very well, and we can see it by the numbers right here. We can see it. The revenues are growing super fast. 39% is nothing to scoff at. It's crazy fast, right? Their daily active users growing 30%, and they're saying that's not enough. We want more users. They're saying 30% year-over-year growth in their daily active users is not enough, and they've reached a milestone of $1 billion in revenues this year. And people are saying, "Oh, that's bad. That's bad." So I hope you guys can hear me. Yeah, someone Dominique says she's got to get back on her Duolingo stock. So I am really excited about this because Duolingo is making lots of money. They have lots of users. They have 50 million daily active. That's an insane number. Just think about it. 1/7 of this country, the amount of people who are using Duolingo daily, 1/7 of this country's population are on Duolingo every single day. And Duolingo is the largest language learning app out there. And it gets much better. This is why 2026 is their year. In the last less than a year of having chess, they have become the second top chess app. The second top chess app in less than a year. That's what scale gets you. That's why having lots of users gets you. You can just tell them, hey, I have this new thing over here. You love our language app. What if you try chess? You've always heard about chess. Chess, not checkers, right? Everyone says that. 3D chess, 4D chess. Can you play 3D chess? First, you have to learn 2D chess. And well, I guess it's 3D since you are in person. But anyway, you have to learn how to play chess. And they turn that into a booming business, right? So even if they're not charging for chess right now, they get ads, right? I haven't looked into their actual what they do with chess, but I imagine that they're charging the same subscription fees, right? So you get some free features, but then if you want to get to an even higher tier of features, you pay them for super or max or whatever, and you get that. So I don't get why the market is so dumb. People who invest in the stock market, I love you all, and if you're watching this, you're not the person I'm talking about. I love all the people, but they just aren't so smart. They just follow the crowd. They see line go up, they chase it. They say, "Oh, green line, I gotta get in there." And they see red line, they say, "Oh, I gotta sell. I'm losing all my money," and they sell. That's how they lose money. The way you make money in anything is by investing for the long term, for a very long time, so that one day you pop out and you have all the success, and everyone's like, "Oh, that's an overnight success. That person's so lucky. Oh, they got so lucky. They couldn't do that again." Blah 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 blah, blah, right? There's so many things they say, but what they don't realize is that you were investing forever. No one could tell because you were in the background just working. When everyone say it wouldn't work, when everyone say, "Hey, you're trying too hard," everyone says, "Oh, don't do that." They just grind. You grind and you work. When you can't afford anything but ramen noodles, right? Rice and water. You just keep working, and then one day it pays off. It's just the same thing we see with stocks. You invest. The word is in the word invest, to come into ownership, right? right? To come into equity. You vest into your ownership of these companies. That's what the word invest means. So the best way to invest is to continuously come into ownership at cheaper prices, not higher. So all the companies you see in the stock market, they started off as private companies and now they're public. And the reason they started off as private companies is because someone, an angel is what they call them, angel investors, said, that is a very dumb idea, but I like you. You want to go teach people how to learn? Probably won't work, but I like you, I believe in you, so I'm going to give you $100,000. And that person goes out and they have this big dream, this moonshot, and they say, I can teach the world how to learn languages. And everyone's like, oh, that's dumb. Who wants to learn how to speak Spanish on an app, right? And they say, okay, still, I'm gonna do it. I'm going, even though if you don't believe in me, even though my stock is only worth 1 cent per share, right? That's how these companies start. Their stock starts at 1 cent per share. You literally, if you go read their incorporation documents, their stock, they have millions of stock worth 1 cent per share. And then the investor says, hey, I think that's actually worth 2 cents per share or 10 cents per share. And they say, here's $100,000, go build it. And then somebody else says in the next round, so they start with the angel round, angel investors, right? And they give the money. And then the next round, they say, oh, let me go see if I can find more investors. And that's called a seed round, right? And they get more investors who believe that this company is actually going to become something, right? Your language learning app, still, I think it's a dumb idea. You could probably do something better, but I like you still, and I'm going to invest in you. Go build that learning app. And now the company is worth 10 cents per share. Literally, I own this shirt I'm wearing is Medium, medium.com, the largest publishing app, publishing website on the internet, right? You go to medium.com, that's where you read everything. You read about tech, design, all of it. I worked there 2016, 2017, 2018, 2019. That's my first job out of college. And I own shares in I invested $15,000 into Medium in 2019 or 2020. And I own shares of it. So all these companies start off with people not believing in them. And then someone believes in them and they invest in it for years, 10 years, 15 years before they go public. And then they go public and the same thing happens over again. People say, "Oh, that's dumb. AI can do it. AI translations will do everything. You don't need Duolingo," and they sell the shares short. People say that company is not going to survive. Like this guy in my chat right now. What was his name? What did he say? He said Duolingo is over. Don't buy. Why are you buying this? Because I believe that in 5-10 years, I'm going to reap the rewards heavy. When everyone is saying today this company is worth nothing because everyone else is saying that, I look at the numbers and I see that Duolingo is doing so well. And you guys can't see me this whole time. Darn it, I've been so animated and you guys couldn't even see me with my animation. But the company is doing so well. And I'm excited because when I look at these numbers and I see 39% year-over-year growth in revenues, I love it. I absolutely love it. Because now they're saying, that's not enough. We like the revenue, but it's not enough. We want to grow our users. And then in 2 years from now, we'll have double what we have today of our daily active users. We have 52 million daily active users. We can do better. We can do better. We can get to 100 million daily active users by 2028. And what does that mean for revenues? It means that it will also grow. I don't know if it's going to double, but they believe it's going to more than double. They believe it's going to go from $1 billion a year to $2.5 billion in 2028 or 2029. So that's more than double. And that's wonderful. So once they get all those users, they're going to be able to upsell them and say, hey, you've been using Duolingo for years. Why don't you go ahead and upgrade to Super? Look at all these nice features we have over here. You could become a better learner. You could reach your goals. You could get to level 120 in Duolingo. And that means that employers will take you seriously because they believe in us. We actually have the top English test that organizations use to assess whether or not this person that's applying to their organization is qualified, right? So we can tell employers that you reached level 120 or whatever the level is that he said. And so that means that you are actually qualified in the language that you've been learning on Duolingo to do the job of translator, or be the person who understands what the criminals are saying, or the person across the table is saying, so that you can help the business make more money, right? So there, even through all of the negativity that we see, and of course, keep commenting in the live chat. If you have a question, I would love to hear from you. Let me know what you're thinking about Duolingo, negative or positive, neutral. I would love to hear what you guys are all thinking. But I'm excited because Duolingo has tangible effects on real life. They are a gaming app that is the top learning app, top language learning app out there. And now they're saying we can get into chess and dominate there too. They're already the top 2 in chess games, chess apps out there. We could be the top 2 in music. We could be the top 2 in math. We could be the top 2 in teaching how to become an electrician. We could be the top 2 in teaching you how to be a photographer. Right, teach you all the different features of an app. Have you looked at the features on your iPhone, on your Android, on your digital camera? Have you looked at all those features? Duolingo can teach you day by day how aperture works, exposure, right? All these things. There's so many different words that I don't know because I'm not a photographer, but I am a YouTuber, so I understand that I can do my little basic stuff. But if I want to upgrade my production quality, I would have to learn how to use those tools, and Duolingo could teach me every day because I've been learning how to speak Spanish for over 900 days on Duolingo. And so I would do the same thing with photography because I care about at least learning incrementally every single day, just little by little, how to be better at the things that I do every day, how to be a better speaker, how to be a better photographer, videographer, right? How to maybe even learn how to hook up my own light box so that I don't have to go hire someone just to change a switch, right? So if the more skills you learn in life, the more interesting, the more fulfilling life feels because you can engage with more people. I was at a hotel, the Marriott in New York, like 2 weeks ago, and my AC was not working. And so I called downstairs. They sent me some Spanish speakers, and they were working on my AC. And I was talking to them. I was understanding what they were saying, and I was just like listening in. And then when they got done, I talked to them and I said some stuff to them, and they said it back to me, and we had a good laugh. And that made life more interesting in that moment because I could engage with somebody else from a different walk of life, and I could understand them. And I pay for that. I pay for those moments because I really enjoy it. Just having that moment was great for me, right? And watching TV with my girlfriend, she's like, "Hey, can you translate what that person's saying?" And I'm like, "Yeah, I can do that, word for word, without a translator. I know how to do that because I'm on day 900. At that time, I was on day like 894. Now I'm on day 913, and I'm that much better. So learning anything requires that you put in the effort every single day, right? You have to actually do the work. And the problem is, lots of people can't even imagine doing work, and they think they can't conceive of the idea of 50 million people every single day learning how to speak a different language. Duolingo's top 9 languages cover about 90% of their users, right? So, and then what happens is, I'm a big believer in SoFi. I've been investing in SoFi for a long time. What happens is, as they are successful in each of these new verticals, each of their verticals, like they were in language, their users become promoters of them. Their users become their marketers. Word of mouth is the most powerful marketing. And so now they have 50 million people who are ambitious, right? And just like excited about Duolingo. And they go and tell their friends, and they go tell their YouTube subscribers how much they love Duolingo, like I'm doing right now, right? And that gets them more users for free. And then once those users are in their ecosystem, they can say, "Hey, you want to learn how to do plumbing? You want to become a plumber because it's very tough to live in the United States this time because of inflation. The economy is tough. you need a job that's stable and you can avoid all those layoffs, right? If you're a plumber, electrician, you're not getting laid off, right? I've been laid off. It doesn't feel good. So why don't you try our new plumbing learning app, right? We can teach you how to be a plumber. And at least you will learn the basics over the next year as you do your grocery store job or Uber job, right? Between trips, you can do Duolingo, learn how to be a plumber day by day. And then a year from now, 2 years from now, you can go take that certification class, right? In real life and become a plumber and upscale your life just like that because you sign up for Duolingo and they teach you how to become a plumber day by day. So I'm just rambling for that by now. I just would love to hear anyone in the chat. And I see you, Elias. Me, you said, I believe that Duolingo is going to be the best education platform in 10 years. It already is the best education. That's the funny thing about it. It already is the best education platform. I can't think of anything that's better. They said that their goal is to get to 2% of saturation in each of their top countries, right? They're at 2% of the population in the US uses Duolingo every single day, right? 2% of people on the internet use Duolingo every single day. That's insane. People don't get that, and they're so sticky. They retain their customers, right? Duolingo said, the CEO, I'm forgetting his name right now, but he's a great guy. I listened to his How I Built This, and just his story is just very impressive. But he was saying on this call that 2% of people on the internet in the United States are on Duolingo every single day. That's powerful, right? And the thing about just the world in general is that when you become, let me say it this way, everything converges on concentration. So chaos becomes concentrated, right? You start with government, you start with people who are just scattered, right? And then they come together and say, hey, let's create a government and let's create a central planner, right? There's one entity that controls everything. They have a monopoly on violence, which is the first thing. And so that means that they can enforce taxes, which then allows them to create an economy, right? And so everything you see in this world converged to become a central planned government. That's how we got to these governmental systems, right? The same thing is true for businesses, right? Everything converges into a concentrated ecosystem. So first you had lots of browsers, lots of search engines, and now you only have one search engine. You have Google. That's all you get because everyone decided that this is the one thing that makes sense. This is the best thing for searching. If you want to search, you use Google, right? And so you have the same thing. Lots of different phone manufacturers, Motorola, BlackBerry, Nokia, HTC, Samsung. But today you get Android and iOS. You get two options. That's it. And one of them controls the entire world. About 70% of people in the entire world use Android. Because everything converges to concentration, right? Everything becomes concentrated. That's how the world works. That's how it always has been, always will be. And so you get the same thing with Duolingo. Duolingo realizes that and says, if AI is going to allow people to create apps easier and faster, then we need to spend this time right now just doubling down on our just monopoly in this space. We already are the top learning app, but we need to become so powerful that we're a black hole and nothing can escape. Anybody who wants to learn, their first thought is Duolingo. I can learn on Duolingo. And anyone who wants to leave Duolingo realizes that, what else is there? Bing? I want to search for something, I gotta use Bing? No, I'm gonna use Google. And so Duolingo wants the same mind control, right? They want the same mind space. They wanna make you feel that you have no other options because it's true. They are so good that no other options make sense. That's what they're after. And so they're saying, hey, we are making 40% growth in our revenues year over year, 39% to be accurate. We're so good at making money from our 50 million daily active users. We could make 40% for the next 2 years. We could make 20% for 5 years after that, and then 15% for 10 years after that. And we'll be gravy. We'll be doing so well. But no, we want to be the only thing out there. We want to have 1 billion users. And that starts by first getting to 100 million users, right? Because you start at 1 million users, and then you get to 10 million, then you get to 50 million, then you get to 100, and then 200, and then 600, and then 1 billion. And who can stop you at 1 billion? Who can compete with you at 1 billion? That's why Facebook is under constant watch by the regulators who say that they're too powerful. And I agree. Facebook realized early on, Instagram, that's a cool app. Everyone likes those filters. It's going to be the top photo sharing app, and photo sharing is going to be the most important thing socially in the future. We're going to buy Instagram at $1 billion in cash, which was unheard of at the time. And everyone's like, "What? You're buying that unproven photo sharing app for $1 billion?" And Facebook said, "Yeah, we're gonna do that. We're gonna buy Instagram for $1 billion." Why? Because they realize that they want to be the monopoly forever. They want to be the only thing you think about when you think about social media. They wanted to buy Snapchat. They probably want to buy Twitter, right? So monopoly is the goal, right? We have in this country, we value antitrust. At least we want to value that. That's why we started off by breaking apart the railroad companies, and we broke apart Bell Labs that gave us AT&T and Verizon and Sprint and all of these other cell phone companies, because we didn't like the monopolies, right? The ones that were bad. But we also value monopoly as a human nature. We want to just have the best thing handed to us, so we don't have to think. You want to search? Google it. You want to go to college? Go to Harvard, go to Stanford, go to Yale, right? Go to the best ones. We want to do the best things, and we don't want to consider other options. And so that's what monopoly works. That's just how it is. It's anti-competitive, but it doesn't have to be. You can become a monopoly who allows competition, just like Duolingo said, hey, there's a bunch of learning apps out there. Go use them if you want to. That's fine. It's fine with us. But you'll be back. You'll be back. We're the best option on the market. You can't beat us. We know how to keep you. We know how to serve, and so you're going to stay with us. And they have been so good at that they see these numbers that we're looking at here, and they say, that's not enough. We can do better. We $1 billion in revenues. That's great. That's our milestone. We just got there for the first time. But you know what? Actually, we think we can do 2 billion. We can do 2.5 billion in 2028 if we take a step back right now and go invest in getting more users. Come into ownership of those users. And once they have those users, they don't leave. Users of Duolingo don't leave. And the ones that do leave, their top complaint is, or their top response to the exit survey is, I got busy. Like the CEO said on the earnings call just now. He said all they say is, I got busy. And what that means is Instagram's calling, Facebook's calling, Twitter's calling, some other distraction, Netflix is calling, right? I want to go sit down on my butt and be lazy and doom scroll. That's Duolingo's top competitor, doom scrolling. Not another language learning app, not whatever AI thing you think your mom can spin up and make her own Duolingo competitor. No, it's not that. It's people being lazy, people running out of motivation, and that's just what it is. You can't stop that. But what you can do is give them reason to stay longer and give them reasons to come back. So they're tired of learning language how to speak Spanish. Okay. Hey, why don't you learn chess? Why don't you learn music? You always want to learn how to sing that song or play that song you love from that show that you love on Netflix. Learn how to play the piano. Learn how music works. Learn the theory of music so that you can actually go learn guitar or learn piano or learn the flute, whatever, right? They will become, as Elias said in the chat, leave me comments in the live chat, guys. I want to hear from you. As Elias said, they will become the best learning platform out there. That's just what it is. So I am super excited about this. I'm just talking right now. I made a video earlier saying a lot of this actually, but there's more to what I made. So I'm gonna make a video and publish it soon, probably tomorrow, on why you have to buy Duolingo right now. But I'm gonna take a quick break before I get into that and turn down this heat. My heat is way too high. So give me a second. Come in the chat. Give me your thoughts. Are you buying? Are you selling? Are you holding? Are you just watching to see what happens? Let me know. I would love to hear from you. Let me just take a quick sip and I'll be right back in a second. So, okay. The problem with investors, especially those in the stock market, like when you invest in real estate, you don't see the value go up day by day and minute by minute. You buy the real estate and you hold it. You collect your rent, you pay your mortgage, and every year you come into more ownership of that property. Just like Duolingo is coming into ownership of more users. And so if you then see that the house next door goes down in value, you don't go and sell your own house. You don't say, oh, someone else out there thinks that my block isn't worth as much, so it's worth $1 less today, $100 less today. So I'm gonna sell my own house. People don't do that, right? What you actually do is say, oh, that house next door is worth $10,000 less. Let's see what happened to their house. Maybe I can buy it and grow my ownership here, right? So when you invest in real estate, you're thinking long term. And that should be the same thing for you if you're investing in the stock market, in stocks, in any business, even your own, right? You want to invest for the long term and you want to hold your shares so that you can, when it does go up in value, you can reap that reward. And let me fix this graphic here. Let's see what else they have. It's just big numbers. Let's go back. So let's go back here because this is what matters. Let's close that, clean this up a little bit. Okay, so all I see here again is free money. I really like it. If we zoom in here, we can see that this company is growing fast. Users, paid subscribers, revenue, total bookings, everything is up, right? And so what I think about this is that with the stock down to by $25 per share, I think that's what it is, $25 per share down, right? In aftermarket, after these great numbers, because people are saying, oh, they missed their earnings expectations. I'm fine with that because they already told us at the beginning of the year that that's going to happen. And then the market sold off. And then they said, oh, we actually didn't meet what you thought we were going to meet. And the market sold off again. So they're double penalizing this company for what they already knew. And that just gives us long-term investors the opportunity to then buy more shares for cheaper. If I bought it at $100, I'm buying at $90 because the numbers look great to me. The plan looks great to me. The plan is sound. And I agree with it. So, Dom says, just waiting to see how low I can buy that. So yeah, maybe tomorrow it goes down to $85 per share. And then the day after that, maybe 75, right? Whatever the case. But whatever price it is, under $100 is just insane, right? That's just like someone saying, hey, here's a barrel of money for free. You can't touch it until 2028, but it's lots of money for free. Just all you gotta do is give me $10 today, and then next year that becomes $40 for you, or $25 for you, whatever the case. It's more money than you're paying me right now. You're just going to get all that money for free if you just hold this barrel until 2028, until 2030, right? So that's how you gotta think about this. When the market's crashing, everyone's running away. You say, why are they running? Where are they running to? What's happening? And you look at the numbers and you say, what? Is that what they're running from? I like this number. This number is big, and it's growing bigly, as our president would say, right? Our president, who of course isn't helping any of the situation because of his tariffs, but he will say that's bigly. That's great, huge, right? So I see this, and he said, aren't they hurting their max users by moving video call to super? I don't know if hurting is the word. They're not hurting those people by giving access to the feature to other people. I think maybe what you're trying to say, Toshiba, is that they are disincentivizing people from upgrading to Max. I believe that's what you're trying to say. So yes, and they spoke to that on this video, on this earnings call when an analyst asked, and they said yes, maybe, but video call. The reason they started with video call for Max users is that video call, AI video calling, was so expensive when it started. So that means they have to subsidize it. They have to pay for the cost of offering AI video calling by charging a high fee, right? Like Tesla, right? Tesla started off with one car, the Roadster, and they said, we're going to charge a super premium luxury fee for this car because that's going to help us fund our future ambitions, right? And so then once they got enough funding from the Roadster and show that it can work, they said, oh, we can actually provide that same level of performance and luxury to a larger market. And they said, next is the S, the Model S, the S class, right? Like Mercedes S. And they said, this is our luxury offering. It's going to cost a lot of money, but that will help us afford to go down market and then offer the Model X and the Model Y, right? And the Model 3, right? So everything starts this way. You start expensive so that you can actually offer the thing that's not cheap to offer, and you use that to subsidize your lower tiers going forward. And so what they have to do now, as they said on the call, is they have to figure out at what level of offering of this AI video call can they give to lower tiers of the subscription that it won't disincentivize their Max users enough to downgrade. And then also the second part of that is that they have to add more features, right? So we have to think, instead of thinking negatively, gotta think positively. They maybe are given reason for people to downgrade, but what can they do to offset that? They can offer more reasons to stay on the higher tier, right? And one of those reasons is you may get unlimited access to AI video calling, while the lower tiers only get one call a week or one call every month, right? But you can call whenever you want. You can talk to Lily whenever you want. And maybe you can talk to Falstaff and all the other characters, because you don't like how Lily is an annoying Gen Z girl who is just super nonchalant and standoffish, right? So there's lots of ways that they can offset that disincentivization, I hope I said that correctly, of the Max plan. But if we actually spin this on its head, we can realize that if they just stick to only offering the best features on Max, that means that they get less paid users, a less quantity, right? Maybe they get a higher volume of actual dollars per user, but can they get enough users onto the Max plan to get them as much revenue as they would get if they were to actually go for volume and say, hey, we want as many users as we can possibly get on the super plan because that is what is mass market appealing. We can get 1 million users on a super plan for $10, and we can only get 100,000 people to pay us for max on at $15 per share or $15 per person, right? Per subscriber. And so you do the math and you say, oh yeah, super, if we get 1 million people on super, that's gonna far outnumber and outpace the rate of revenue growth that Max can ever achieve. Because again, not many people have a Tesla Roadster, right? Not many people can afford a Mercedes S-Class, but lots of people can afford a Mercedes C-Class, right? They can afford a Mercedes, whatever, I don't know all the classes of Mercedes. All I know is that there's an S and there's everything below that, right? So if you go for mass market appeal, again, which is what Duolingo is after here, they want to be the monopoly. When you think I want to learn something, they want you to think Duolingo, right? You want to learn how to do math because the future is math. The future is computer and computer is math. Again, I did computer science as a major and half my major was math. It was grueling because I never really learned math as a kid. I never liked it because I didn't feel like I really understood it. But now everyone understands how important math is. And so all these parents are going to want to have their kids on Duolingo from a young age because they realize that Duolingo can teach math better than any teacher can out there. Because their child gets to focus on what they don't know. If they don't know how fractions work, how percentages work, they can just sit there day after day and learn fractions and learn angles until they get it like it's the back of their hand, like it's in their dreams, and they're dreaming of fractions and percentages every single night, right? And then you have the people who are good at math and they're at calculus level, but they don't quite understand the series, right? I'm forgetting all the words now. I passed calculus 2 and I forgot everything after because I don't need it. But anyway, people who are at higher levels of math can still use Duolingo to learn how to do that higher level better, right? And so if Duolingo becomes the #1 learning app because they focused on, hey, we're gonna give AI video calling to everyone, then more people are going to use Duolingo. And when more people use Duolingo, they can then turn this $1 billion in revenue into $2.5 billion 2 years from now, right? So that's what I'm invested in. I'm investing in that future cash flow because I know that they know how to grow their user base and they know how to monetize their user base. And so if they can grow their user base today, and then 2 years from now, they believe they can get to $2.5 billion in revenues, I'm taking that. I'm taking that bet. And if I invested in them when it crashed from $500 last year to $150, I bought at $150, I bought at $140, I bought at $130, I bought at $100, and I bought at $90 per share. Today, I bought 10 more shares at $90 per share, right? And I'm mad because I don't have more money. I have a larger position in another company that I don't talk about on this channel because people didn't seem to understand it, but it's the same thing. I'm going to buy when it gets cheaper and cheaper and cheaper unless I see a reason that says this business is dead. But these numbers don't say that. These numbers say they're growing at 30% year over year in every category. And they're adding 3 new verticals, and one of them, only less than a year in, they're top 2 in the entire market on chess. They were a language learning app and they come out the gate and now are competing like they are a world-class chess tutor, right? And they also said that they want to be the best and they will be the best math tutor, right? So if they could turn language learning into $1 billion for people who want to learn how to translate and get paid to translate, which there aren't that many of. There's enough of them, but there's not that many of them. There are so many more people who want to learn how to do math. They're going to turn that into $1 billion business, into a $2 billion business. And there are people who just want to learn chess, and they can turn that into $1 billion business. Or even if you want to say not so bullish, $500 million, right? For chess in 5 years from now, whatever the case is, right? And as we continue to go forward year after year, they're going to get better, more efficient, right? And Elias says he has a super plan. I bought it at $40 for the whole year when it was on discount because of the new year. So I don't know what plan I have. I don't know what I pay for Duolingo, but I have all the features I need that I like, and my family uses this too. So I have a family plan, and I love it. I make use of it every single day, and I make use of it in real life. So if Duolingo can get more people like me, more people like Elias, and more people like Dom, who are a believer in learning new skills, right, and be a lifelong learner, this company, it's, when I think about it, it's just so simple. Investing is so simple. It is not that tough. You see a company, you say, oh, that sounds interesting. You use it, and you say, oh, that works as they said it does. And you look at their numbers and you say, oh, that's better than I thought they were doing. I didn't think Duolingo was making them $1 billion a year off of this. I didn't think that it was that successful. But they are. They just reached a milestone of $1 billion a year on Duolingo. Selling you Spanish, French, German, right? I learned some Latin in the beginning before I started doing Spanish and Italian. So if they can make $1 billion from teaching language, they're gonna learn how to make $1 billion from teaching math and music and chess. So that's what I'm investing in, guys. As an investor, you have to be fine with down years. You have to be fine with down years. You look back at 2007, 2006, 2008, 2009, 2010, and the market was down big. It was down huge. But when you look at the all-time graph right now, you see that it was a blip. What was such a big deal? The great financial crisis, the great recession. Today it looks like nothing. It's just a little blip on the map. It just goes down a tiny little bit, and then it shoots up. That's how markets work over the long term. So you have to be okay with having a flat year. You actually have to be better than okay. You have to be excited. Because if you are told that, hey, go to school, you're poor today, you make $0, you make negative $400 a month. You're super poor. You make nothing. You don't have any money. But I have a deal for you. Go to school for 4 years, and you'll get out of school, and you'll make $100,000 a year, just like that. But you have to be okay with working for 4 years for free to learn this skill, so that in 4 years you can make $100,000 per year. That's an investment, guys. That's how college works. I did that. I was dirt poor. I'm an immigrant, right? From a civil war. And so I came to this country with my mom and my sister, and we had nothing. And then I go to school for 4 years, and all of a sudden, even a year before I graduated, I had $110,000 waiting for me a year before. I had to get through Calculus 2. It was Calculus 2 or my $110,000, and I had to get through that so I could get my computer science degree. And then I had way more money than I ever thought of. So the same thing applies here. If someone tells you, hey, in 2 years, we are so confident that we can turn this $1 billion that we make today into $2.5 billion in 2 years. But that means that to this year, you have to be okay with us not making any meaningful growth. Well, they probably will make meaningful growth. They probably will do like another 30% or 20%, whatever the case. But you have to be okay with that. You have to be okay with a flat revenue growth, right? That is, it's not going to continue to grow like 35%, 45%, right? But it will continue to grow reasonably. Be okay with that. And if you're okay with that, in 2 years, we're going to more than double your money, right? The value of the company if it follows the fundamentals, should go up by 2x. So when I look at Duolingo being down under $100 per share when it was just at 500 last year, and 300 and 200, that's at least 2x, right? And for worse performance, when they were making less money, they were valued higher. They're making more money now. They have more users. They have milestones of users, milestones of revenue, milestones of profits, right? Well, adjusted profits. And they have a smaller valuation, and you think that's a bad thing? That's a great thing. Someone said, hey, I bought this thing I bought this TV for $100. You can have it for $20. And you say no? It's brand new. I just bought it yesterday. It actually got better, right? When I bought it, I couldn't figure out how to use it, and now I know how to use it, but I don't want it anymore. It's perfect. It's amazing. But you can have it for $20 when I bought it for $100. And you say no to that? So it's the same thing, guys. It's so simple. They're making more money. They have more users. They're going to have more users and more money in the future. And it costs you less to get shares of that future potential. You're an investor, not a trader. If you're a trader, then none of this applies to you. Then you have every reason to be mad because the stock is down when it was supposed to go up for you because you could tell the future and you had a crystal ball that said, hey, I'm going to buy 1,000 shares in stock options and it's going to go up 10x next week when the earnings report comes out, and I'm gonna make so much money in 2 weeks of just hoping, right, and wishing. If that's you, then yeah, you're upset. I get it, but that's your fault. But if you're an investor, you should be super happy. It's free money. Let me read the chat again. So let's see what's in the chat. Imagine if they add more subjects in the future. Yeah, the possibilities are crazy. Like I said in my video 2 weeks ago, I said they could teach how to become an electrician. They can teach how to become a plumber. They could teach you how to be a videographer. They could teach you how to cook. They could teach you how to bake. They could teach you the science of baking. People love to bake. They could teach you how to make your own bakery, right? How to make your own ice cream. How to build a computer. They could teach you how to code. Everyone wants to learn how to code, and even now it's even more important now to learn how to code than it was in the future because now yes, I'm buying a dip, Andy. Welcome to the show. I'm buying a dip. I bought 10 more shares today, and I am still beat down. I don't have more money because I bought more shares yesterday, and I bought a bunch of more shares of my other companies that are down because of all the tariff talks. So I'm mad I don't have more money to buy more shares. I get paid in 2 weeks. It can't come fast enough, right? I want to buy more shares. So anyway, they could teach you how to code because now that you can do more of coding faster, if you want to build the next cool app using AI, you're not going to do that if you don't know how to code. You can't vibe code your way into that. It just won't work. I know that because I'm a software engineer and I do vibe coding, but I'm a software engineer, so I know how to actually make it work and not break. So if you want to do that, you have to become a coder. You have to learn how to actually code and then become a software engineer and systems engineer, right? And actually understand systems. That's what I know because I got a degree in that, right? And so Duolingo could teach you how to code. They could become the best coding teaching app out there. They could become the best electrical engineering teacher out there. They could become the best math tutor out there, like they said they're going to become. They could become the best chess teaching app out there, which they're number 2 at right now, and eventually become number 1 very soon. In less than a year, they're at number 2 in chess, right? So, and they're not even showing up for chess on the App Store. When you search for chess, Duolingo doesn't show up yet because they haven't done chess that long, and yet they're still number 2. They have 7 million users, daily active users, learning chess on Duolingo. And you were telling me that this company is worth less today than it was yesterday when they didn't have music, math, and chess. Guys, investors, the market is just not that smart. It's not rocket science, guys. The market is not that smart. So let's see what else is in the chat. So I think the whole year 2026 will be buying opportunity. Yeah. Yeah. Taruka Shao. I like that name. It will probably go up in 2027 or 2028. Yeah. Yeah. That's what you're investing in. You buy when the thing is cheap, you hold it, and it goes up eventually because the numbers make sense and it actually works. People actually buy it, people actually use it, and they retain their customers, and you benefit from that. So guys, it is so simple. People make investing seem so difficult because they're doing it wrong. They're trying to trade. They're trying to day trade. They're trying to the average day trader, and I think it was like CNBC did a study a few years ago, and I think it was either the majority, like 90% or something like that, 95% of people who did day trading made minimum wage. If you average out their earnings for the year, they barely made minimum wage. So if you ask them about investing, they'll say, "Oh yeah, it's so hard, man. It's so hard." You ask traders, they'll say the same thing. "Oh yeah, you can't time the market." No, but you actually can. You just don't take action on it. You realize that the market is down today, and for the business you're investing in, the business, guys, business, not the stock. The business is worth less today. The market capitalization, the valuation of the business that you're investing in is less today. And you see that their plan is sound, that they are actually executing, that people, real people, millions of people actually use what they're offering, and they continue to use it. And they have a plan to get even more millions of people across the entire world to use what they're offering. And you see that they're worth less today than they were yesterday when they had less of all of that. And you don't invest in that because it's down. Your only reason to not invest is because it's down. And because they told you that they're going to invest in growing their user base so that they can upsell them in the future, leverage that like any hyperscaler does. When you get to 1 billion users, you just have free revenues. You can sneeze and make $1 billion when you have 1 billion users. You sneeze, you make $100 million, right? You cough, you even roll your eyes, and you have $100 million in revenues when you have all those users, right? So that's the idea here. Let's see. So Elias says in the chat, live chat, guys, leave me your thoughts in the live chat. I want to hear the positives, the negatives, the in-betweens, what your theories are on what the play is with Duolingo, what their plans are. What subjects do they teach? What do you guys do for a living, right? What do you guys do in your professions, or what are your hobbies, right? I want to do woodworking when I retire. So I want to learn how to do woodworking. I did it in elementary or middle school. We had woodworking and metal shop in middle school, and I loved that. Right, I made gifts to my families with that they still use today. So Duolingo could teach that. They could teach you woodworking. They could teach you metal shop, and I would pay them $20 a month, $50 a month when I retire. That's what I'm gonna be doing all day. So if I could learn how to be a great wood shopper or whatever, metal shopper, I would pay $50 a month to learn that. And I'm not even being crazy, because it's expensive. It's an expensive hobby. So I would pay for that, right? So let me know what your hobbies are, what you do. So let's say Taruka says, why do you think it's going to stay for long? I think 2026 only shows good growth numbers. Yeah. The numbers are great. The growth is great. These are great SaaS numbers, and it's going to get better once they come back and say, hey, we now have 100 million daily active users. Let's go turn back on the money-making spigot, right, and make more money in 2 years from now. So, and then Elias says, because it's cheap, it's too cheap right now, this is where investors that are not too convinced buy just because the cheap prices. So guys, I have a sad story to tell you. I invested in Carvana. I think it was at $4 per share. $4 per share. And then I sold it. And if you look at Carvana stock, let me show you something. Let's go to incognito because I don't want you guys seeing my stuff. Let me show you something real quick. Carvana stock. Okay, let's share my screen real quick. Let me show you guys a SaaS story. You want to see a dead body? Let me show you something. Let me show you a dead body real quick. Okay, guys. So you see this. This is a very SaaS graph for me because I invested in Carvana around here. And then, because I didn't understand the business and the market well enough, I sold Carvana, I think around here. Or somewhere around here, right? I just sold it because I was like, I don't get this. I don't really understand this. It looks too risky. I don't get the used car market. I'm a software engineer. What do I know? And then a year, and then look at this. Look at this. Look at this. So if you sold down here just because the stock is low and it's over, bro, you missed out because of the market telling you that it's not good. That was the only reason, because the stock is low. You sold. I could have waited. I had no reason to sell besides I just didn't know anything about the business, so I sold that. I think that was a good reason to sell actually, but. Elias says, "No way, that hurt. That has to hurt so bad." Yeah, it hurts. It hurts a lot. I did the same thing with Macron. I bought Macron at $89 per share last year, and again, I didn't quite understand the market. I didn't quite understand RAM and all what and how that plays with the AI. I understand it because I'm a software engineer. I didn't think about it and the implications that it would have with the AI market. And I understood that it was good, but I bought it at $89 per share, and I didn't quite understand how it was going to grow. And I sold it. I wanted to invest more into my other companies, and I did. And then it goes up to $400 and whatever it is right now. So guys, just because the stock is a low price and lower than it was yesterday isn't a good reason to sell, right? That usually is the reason to get in, because on the flip side of those SaaS stories, I've done this multiple times. When MongoDB crashed to 115 last year, I told my girlfriend and myself buy, and a few weeks later, a few months later, it was up at 300 plus. I did the same thing in that same time period with Chime. It fell to 16. I said buy. It went up to 25, right? Same thing with Cloudflare. Same thing with who was it recently? Darn it, I'm forgetting the other ones that we did. But you can do it over and over because that's how I get more capital to invest in my long-term plays. When I see the market just crash irrationally, I look at it and say, what's going on here? Oh, the company, people are afraid that the company isn't going to grow as fast as it is. It's going to grow at 2 percentage points less than it did last year. And so I say, I don't think that's the case for the long term. I think that this company is actually very strong. They are a duopoly in the market. So they're going to recover from this very fast. The stock is not going to stay down here. And so I buy. I did it with Upwork back in 2021. I told my patrons, guys, this is a buy. Same thing with Uber. We got 3x of our money on Uber back then, and so you can do this over and over again because the market is not so smart, and the market is actually made up of a lot of robots and traders. And so they just follow the crowd. They just go with whatever people say. You would think with proprietary data in teaching skills and tech stack, they would be putting out verticals at a very fast pace. Chess is great, but we need volume in subjects. I agree, AA613. I agree. I think they spend a lot of time trying to perfect the model. Can you guys see that in the background? It's my TV. I was watching Night Agent. Love Night Agent. But yeah, they spend a lot of time perfecting the model of teaching language and how to just keep people engaged. It's super hard to keep someone doing the same thing that's hard every single day. It's hard to learn, right? Let me put back before I forget what we're here for. It's very hard to learn because people get bored learning, right? People want excitement, like I have to learn this thing every day, and so they get bored, they walk away. And so Duolingo has learned, they have perfected how to teach, right? And so they spend a lot of time doing that. They wanted to really perfect that. And now I think that they have figured out, okay, we know what works. We know what doesn't work. We know what turns people away. We know when to notify them. We know when to engage with them. And so we can now apply that to math, music, and chess. And so I think all of that investment early on and really going in heavy on the science of teaching effectively, because most teachers are not effective. I was a teaching assistant in college, and what I perfected at was breaking down subjects in a way that was simple to understand. I actually wrote the book on Java programming, the programming language Java. I wrote the book Java for Humans because I was going to be a teaching assistant next semester, my junior year of college, and I wanted to give my students a better and simpler understanding of what the teacher was teaching because I understood that students don't get what teachers say. And so you got to break it down. You have to make it engaging for them. You got to make it relatable, right? And so I actually love teaching. I was a teaching assistant. I actually taught at my university when my teacher was out. Whenever my teacher was out, I would teach the class, right? So it's hard, guys. Teaching is very hard. And that's actually a huge moat, right? How do you keep someone engaged in a lesson for, in my case, 914 days now, straight? They have millions of people with over a year of a streak. That's insane, guys. That is not. You can't overemphasize how significant that is. They have figured out how to get people to learn a language every single day for 3 minutes. And those people who actually spend more than 3 minutes get so good at learning a language on Duolingo that they can get a job in that, in speaking Spanish, in speaking French. They can be a professional Spanish speaker because they use Duolingo, and they were a good student, right? And the other side of the story is that people have to want to learn. And so when you hear people out there, the loud minority of people who decry and speak down on Duolingo and say, "Oh, it doesn't work," it's because you didn't do the work. You didn't put in the work. It's the same thing for college. If you go to college and you don't get a job after, you probably didn't put in the work like you were supposed to. You probably was one of those people who says C's get degrees. Well, no, that's not the point of it. The point is to actually apply that degree, to actually do something with that degree, right? And so that's why I was able to get a job, have a full-time job before I graduated college, waiting for me a year in advance, right? So if you put in the work as a student, you're going to get out the rewards. Mr. RJ says, how to say bankruptcy in Spanish. ¿Cómo se dice bankruptcy en español? No sé, pero no bankruptcy, nunca bankruptcy para Duolingo. Duolingo es muy mejor negocio. See? Comprende? Huh? So I learned that from Duolingo. I just spoke to you in Spanish, responded to you. I don't know how to say bankruptcy, but I can go look that up real quick, right? But the rest of it you understood if you were a Spanish speaker, right? So there's your answer, Mr. RJ. 900 days of Duolingo, 3 minutes per day. If I was to do 10 minutes per day, I would be in an even better shape. And I could actually continue my response to you, right? And maybe tell some jokes. And I will get there at some point, because right now I'm grinding in my career. I'm trying to grow my YouTube channel. If you're not subscribed, help me get to 10,000 subscribers, right? So that I can speak to Mr. RJ more in Spanish and rebut his jokes against Duolingo. Mr. RJ, thanks for your comment. I appreciate you, but I disagree with you. I don't think Duolingo is going to do bankruptcy anytime soon. If you look at these numbers and you see on the screen, 30% year-over-year growth. Just because the stock is down doesn't mean that it's going bankrupt, right? In 2019, I sold my marketing publication that I built during college for $30,000. And what did I do? I put most of that money into Tesla stock. And what happened? 7x. Because everyone said it was going bankrupt. Elon Musk said it was going bankrupt. And I said, no. Elon's not the authority on that. He doesn't get to say if Tesla goes bankrupt. The investors who own Tesla say when Tesla goes bankrupt. So they were not going to let, I know Silicon Valley, they were not going to let Tesla go bankrupt after all that work they put in. And after they had the market lead, they were EV. If you want an EV, you want a Tesla, right? It wasn't going bankrupt. So I put in all that money and I made 7x in less than a year, right? I believe that was what it was. Either 4x or 7x. It's been a long time, but guys, it's not that tough. So no bankruptcy, nunca bankruptcy. Where do you think Duolingo fair value is at right now? I couldn't tell you, but there's lots of very smart people who are better at that than I am, who have numbers. And if we go to Morningstar, I believe Morningstar has their. I'm a software engineer, guys. All I know is how to spot patterns, how to think about businesses clearly, and think about potential and systems. But I'm not going to pretend to be a financial analyst. But we have very, very capable financial analysts at our disposal. And I believe what I saw last was like 250 fair value, something like that, something around that ballpark. But I'm not sure. I'll have to look it up. But what I do know for sure is that it's worth more today, if in a sound market, than it was yesterday, right? And it's going to be worth more in 2028 than it is today, if their plan plays out. And what matters now is, what do I think? What do you think as an investor? I think the plan makes sense from everything I've read, everything I've seen from this company, everything I've seen from the CEO and his story. I think that they are good stewards of this business, and whatever the fair market value is today, it's going up in 2 years. I just have to be patient and invest more and more and more. I'm going to buy more shares. I really wish I had more money today. What about more, right? And if it goes down to $75 per share for whatever reason, I would buy more. So that's where I stand with this. Let's see what the other comments say. I missed one earlier. Let me go up to that. What I find most interesting, Taruka said, is that the buyback announcement for $400 million. Yeah, so the company. So the company announced that they have authorized from their board and investors that they can do a $400 million stock buyback this year. And they're going to do that at some point, right? So they got authorization. And now, this year, at some point, they're going to do a buyback. So if the stock continues to go down, they're going to be able to buy it for cheaper, and that's going to increase the value at some point. So I imagine they have a chief investment officer at this company somewhere who understands the markets and understands forecasting, and will pick a good time to go buy back their shares. And excuse me, and that will bring up the value. That will bring the stock price up at that point in the short to midterm, right? So that's good for investors. I personally am not a big fan of buybacks. I would rather them use that money to go invest in building a better product, right? Because that's why we don't get dividends as growth investors. We're investing in the future of this business. So we're not investing in the today of it. We wanted them to spend all their money today, all of their leftover earnings, to go reinvest into the business, to go build better features, like who was it? AA said they should go build more subjects, right? Offer more than chess, music, and math. Go invest more heavily into math. Actually, I think if they invest heavily into math and then introduce coding, learning how to code on Duolingo, I think that would be a huge mover for them. So I would rather them just keep the money and go invest. That's why I don't like dividends. I don't do a dividend investing, because right now I am trying to grow my wealth. I'm not trying to maintain it. Dividend is for maintaining wealth, right? You don't invest in a dividend company when you're trying to build your wealth. You invest in a company that's going to use that money better than you can, right? That's what growth companies are for, because they are still growing. They will use that money to go invest and grow the business. And you believe that they can do that better than you can, because that's why you don't accept the dividend. You don't if they take their earnings and give it to you, then now it's your job to go invest that money and make it grow. But you're not good at that. That's not what you're a professional at. You don't know how to grow that money better than they can. So you want them to keep the money and reinvest it and grow, get more verticals, get better quality, right? So that's my stance, but they know what they're doing. I trust them on that point. It's not a big deal. So I'll let that be. So let's see. Tarika responds, but I think it's smart for Duolingo to do this buyback. They must know you won't get these prices. Yeah, that's true. That's true. Because if they, what they could be thinking is that if they can buy the shares back at $8 per share, not $8. If they can buy it back at $80 per share, right? Let's just say it goes down to $80 per share. It's at 90 right now. It goes down to 80 at some point this year. They know that at some point in the future, they are so confident that their shares are going to go up in value to, let's say, 150, 200, 300 in the future, that at that point they can turn what they bought at $80 per share into a new offering. They could sell back those shares to the market in the future at $200 per share, right? Because that's what the stock market is. It's a fundraising instrument. When they need money in the future, they can say, and people are excited about them, and people love their stock. They can say, hey, you want to buy more shares from us? We're gonna sell you those shares. We're gonna put more shares in the market. We're gonna sell you those shares that we bought at 80 now for 200. And some people are gonna say, oh, that's dilution, and so the stock will go down a little bit. But Duolingo would then have raised more than 2x their money on what they bought at $80 per share. So Tarika, I agree. They have their plan. They know better than I know. So I'm just telling you my general thought on buybacks and dividends and just wanting my company to invest in the business. But I agree. There is a good plan, most likely, and I think that's what it is. That they're going to try to flip this because they see that the market sentiment is so low irrationally. That's the only reason that they would do this, because they think the market is irrational right now and that their share is just ridiculously low, right? And so they're going to buy cheap and then sell it high in a year or 2 years from now, right? I think that's what's going to happen. Man, I've been talking I didn't realize I could talk this long. Guys, 2 hours, guys. I appreciate all the chats. Who else? Who else has a question? Let me take a quick sip because I am just parched. My water bottle is empty. Okay, so let me find you guys a quick video so I can go get more water. And I want you guys to watch this because it's a great video from the CEO. He's talked about the future of the business and why he's so excited about growing it, and AI translation. Just real quick, let's watch this video. Okay. Yes. Watch this video real quick. Let me share my screen before you guys get distracted and want to leave me. Let me share my screen. So you guys might have seen some of this in one of my earlier videos, but this interview is great. I really like this. I really like this interview, so I'm gonna have you guys watch just a few minutes of this while I get some water, and yeah, let's play.
Just tell us, you're making M&A, you're showing growth. Just tell us the vision, because many would say, okay, Duolingo is about language learning, but it's actually about a broader education offering right now.
Yeah, I mean, ultimately, we want to teach multiple subjects. I mean, at the moment, you can already learn certainly languages on Duolingo, and that's what we're most well known for. But you can also learn math and music, and of late, chess. And ultimately, the idea is, I mean, you know, we're around 130 million monthly active users. The idea is to have 1 billion people really learning useful things on their phone as opposed to doom scrolling. That's really what we're trying to do.
Fascinating. 1 billion that use music literacy with the NextBeat acquisition. As you say, growth in chess seems to be off the chart. What's interesting, though, is we referenced your daily active users that did rise 40%, but actually that was the weakest rate of expansion since 2022. Why is that slowing? Will it re-accelerate, Luis?
Yeah, I mean, look, we had 40% year-over-year growth, but that's lapping a quarter from last year that had 60% year-over-year growth, which in turn is lapping another quarter from the year before that had 60% year-over-year growth. So our growth has been tremendous over the last several years. And, you know, we expect it to continue being really good.
Really good. What gets you there other than product innovation? What you thought would get you there in many ways has been generative AI, whether it's interweaving it within the product itself, Luis, but also you then went wholeheartedly into AI within your own HR ultimately, and that backfired. And I know you've spoken a lot about what happened on April